Hello and welcome. This is Ian Cooper with Options Academy for Monday, November 22nd. Hope this finds you well. We wanted to share some opportunities that we have been watching for the long side and the short side. But first, we wanted to take a look at some of the technical indicators that we do rely on to find our opportunities. Now, when there is an extremely oversold or an extremely overbought condition, we want to know exactly when things are going to pivot and reverse. And we can do that by watching moving average convergence, divergence, or MACD, Williams percentage range, relative strength, money flow index, as well as your Bollinger Bands. Now, typically, we'll use a stock such as stockcharts.com, and we'll pull up a 1 to 2 year chart. And when these specific indicators align and agree with one another in oversold or overbought territory, we can tell sometimes with 80% accuracy when a pivot in the other direction is likely to happen. For example, we can look at Cassava Sciences. Cassava Sciences has been beaten up again by the same shareholder firm that took it down just weeks ago. Now, this particular firm is now making claims that the scientific experiments backing Cassava's drug are impossible and that the biomarker discrepancies are so extreme that they suggest lab errors or manipulation. Further, the firm claims the results of clinical studies suggests Cassava cherry-picked its patients. This is the same firm that made accusations back in late August that took the stock down again. Those claims were disproven in the Journal of Neurosciences. Now, the firm is coming back with another bear attack. Hopefully, these claims will also be disproven again. In addition, the stock has become technically oversold on RSI, on MACD, and on Williams percentage range. Also, what could fuel further upside in a stock like Cassava Sciences is these accusations from this particular law firm are not preventing Cassava Sciences from moving forward with its Alzheimer's drug studies. In fact, it just launched its second phase 3 study to evaluate the safety of its particular drug with over 750 patients. You know, if we continue to hear good news from this company, I strongly believe that Cassava Sciences could retest its all-time highs around 130 a share again. Unfortunately, we will have to also contend with the potential for further accusations from the bears. Now, another hot stock that we're watching is Moderna. Just the other day, the US FDA allowed Moderna to administer its booster for adults 18 and over. Now, we can use that as a strong catalyst, and we can also use an extremely oversold condition to potentially make money from Moderna. Now, with Moderna, you can see that RSI is at its 30 line. You can also see that Moderna has caught strong support at its 200-day moving average and is also sitting at double bottom support. You can see MACD is on the floor, as is Williams percentage range, which is below its 80 line. With all of these indicators aligning, these three indicators aligning, RSI, MACD, Williams percentage range, we believe it's only a matter of time before Moderna can refill its latest bearish gap downs around 300 a share and around 334.91. So this is an extremely oversold stock here that we believe could easily push higher with patience, especially as we hear of more cases around the world of COVID-19, such as in Austria and Germany, for example. We can also look at Activision Blizzard. Activision Blizzard has been beaten up pretty badly. There's a lot of wrongdoing. There was a lot of game delays. There were accusations of misconduct, which they paid fines for. But we believe that a lot of the negativity has now been priced into this stock. And with a good deal of patience, we believe it could refill its bearish gap around $80 a share. Right now, it is oversold in RSI, MACD, and Williams percentage range. We also believe that heading into the holiday season, coupled with incredible video game sales in the industry, this stock could push higher. We don't believe that Activision Blizzard will ever go out of business. It's simply down on what we believe and hope to believe are temporary issues. And we also wanted to take a look at Apple, potentially on the short side here. At the moment, Apple is a bit overextended into overbought territory, just above prior resistance around 155 a share. But as you can see, after the amazing run-up from triple bottom support around 140 to 160.55, the Apple stock has become considerably overbought here. You can see that Apple is now above its 70 line. MACD is slightly overextended, as is Williams percentage range, which is above its 20 line. Apple's a very strong stock. It can easily push aggressively higher, especially with new products heading into the holiday season. However, the stock is also overdue for a healthy pullback from this point. Those are the four potential ideas that we are watching at the moment for Options Academy. If you have any questions, comments, or we can help you with anything at all, always feel free to let us know, and we'll get back to you as quickly as we possibly can. Again, this has been Ian Cooper with Options Academy. We'll speak again very soon. Thanks so much.